My next guest says the market is fed up with the trust-me approach to succession that Warren Buffett has engendered at Berkshire Hathaway. She is Alice Schroeder, a Bloomberg News columnist and author of the definitive biography on Buffett, Snowball. Alice, always great to talk with you.
Good morning, Betty. Thanks.
So when you say the market is fed up, who are you talking about exactly?
Well, I'm talking about the stock price. If you look at the stock price over the last 7 or 8 years, the multiple of it as a percent of tangible book value, just looking at that very simple metric, has declined very steadily.
It has declined steadily, but wouldn't Buffett himself say it's just the product of the fact that his company has grown so large that it naturally would not outperform the S&P as much as it has in its earlier years?
He might say that, but the fact is that the earnings have grown a great deal, and Berkshire as a business is a lot more valuable. It should be getting a higher multiple, and he spent a substantial portion of his shareholder letter this weekend making that very case.
He did. He also spent part of this shareholders letter, which I thought was interesting, kind of mapping out some scenarios of what is going to happen when he's gone. He talked about a little bit more about Todd Combs. He talked about what would Berkshire look like in a quote-unquote normal year, so maybe one without Buffett. He also talked about managers, that they have to give him in writing who their successors would be. Do you feel like he's at least making some moves that way? Would you give a thumbs up on that?
I do. I sort of called upon him to do a couple of things, and he did one of them. I thought that he needed to clarify significantly the relationship between the chief executive officer and whether there would be a chief investment officer or not, and who would have responsibility for this huge amount of financial assets and liabilities at Berkshire, which includes a derivatives portfolio. It includes, hundreds of billions, a couple $100 billion of assets. And he did that. And he did say there will not be a chief investment officer, that the money managers, which may be several, will report to the CEO. So he elevated the job of the CEO. I thought that was good.
Right, that gave more clarity. One thing, Alice, that I want to point out that you wrote in this FT column right ahead of the shareholders meeting is you wrote about Howard Buffett, who's going to be the non-executive chairman. If the matter were put to a vote of Berkshire's shareholders, it is hard to imagine that they would see Mr. Buffett's son, Howard, a farmer and accomplished photographer, as the wiser business choice for non-executive chairman. Why do you say that?
I think that when you look at business experience, Howie is not completely without business experience, but his real interest is agriculture. He runs a farm. He's the son of Warren Buffett, but he didn't follow in his father's shoes, and his only job at Berkshire has ever been very early in his career, where he was essentially a janitor at the candy company. Looking at that compared to Bill Gates, who not only is an entrepreneur, but has run one of the largest Fortune 500 companies and largest companies in the world, is a board member, has extensive experience and represents the largest single economic ownership in Berkshire other than Buffett.